Q2 is a seasonally strong quarter for IT sector, and that's exactly how this September quarter will pan out. We are expecting strong set of numbers. TCS will be flagging off the earnings season, and we are expecting strong set of numbers from them. Their top line is expected to grow at 4.8% sequentially in constant currency terms, and this will be largely on back of the ramp-ups they're likely to see in the deal wins they had seen in the past quarters. And also in Q1, the India business was impacted because of the COVID second wave, and that is likely to bounce back. So these two factors are likely to result into a bump up in their revenues. On the headwind side, there will be a headwind of cross currency, which will shave off roughly about 70 bips point from the revenue growth. So your dollar revenue growth will be coming around 4%. That's what we are expecting on the top line. Margins in this quarter are expected to improve by 50 basis point, largely because the operating leverage will play out in their favor. And going forward, what their outlook is on the margin front will be watched very, very closely, and that's largely because the industry is really under supply side issues. There are expectations that because of the high attrition rate, the salary cost can go up much more for the industry. However, in case of TCS, the attrition rates have been one of the lowest, so they do not face that headwind as yet. But going forward, what is their outlook? What could be the impact? Will be watched very, very closely. They have given in past that their aspirational margin target is 26 to 28% in the medium term. Whether they maintain that or there could be some kind of downside on that will be watched very, very closely. As far as net profit is concerned, we are expecting a 7% growth in the net profit. But the main thing that we need to watch out in case of TCS is the deal wins. Remember, their deal wins have been very, very strong, largely because the demand environment has improved substantially. For the past many quarters, the quarterly run rate for their deal wins have been anywhere between $7.5 to $9 billion worth of deals, and this quarter also we are expecting their deals win will be around $8 billion, $7.5 to $8 billion, and their commentary on how the deal pipeline is looking, whether they can improve, they can maintain this run rate, can they improve on this run rate, is something that will be watched very, very closely. And this is largely because this is what will ensure the revenue momentum is maintained going forward. Remember, the management has said that they are expecting double-digit growth in the current fiscal, and considering the fact that the deal wins is something that will ensure that that revenue growth momentum is continued, this will be one figure that will be watched very closely, and management comments around the demand environment will be watched very, very closely. But for now, we are expecting an all-round outperformance from the company. We are expecting all verticals, all geographies to do well, and on top line we are expecting a 4% growth, while the bottom line will go up by 7%.